My name is Luann Lynch. I am a part of our accounting faculty here at Darden. I teach our first year MBA core accounting class in financial and managerial accounting, and I have a second year elective with our second year MBA students in management accounting. We frequently get questions about how one might be able to use the case method to teach accounting, and this will help to provide somewhat of an introduction to that process. When we think about asking a student to prepare a case for class the following day, what we're thinking about is that there's basically about a four-step process that we would expect that they would go through. First is a period of individual preparation in which the student would read the case, prepare his or her own draft analysis, and prepare to attend a learning team meeting later in the day. The second step would be the learning team meeting itself, and that's when the student meets with his or her learning team, which would consist of about 5 or 6 students from various sections in the first year. And they would discuss the case somewhat as a dry run for the classroom discussion the following day, but also because the different perspectives from the 5 or 6 different students can help facilitate each other's learning.
Really, LT is a microcosm of what happens in your section. When you get to LT, members of your learning team will challenge you. So when I get to class and I have 60 of my classmates or 61 of my classmates querying me about, so why did you do this? I have entirely different numbers. I can, with confidence, whether or not my numbers are right, but with confidence, explain my thinking process.
The third step would be the classroom discussion itself. The student comes to the classroom prepared from his or her individual prep and from the learning team meeting, and we can hold a larger discussion among 60 individuals where we hope the learning is synergistic even more than in the learning team. And then finally, after class, we would ask the students to take some time on their own to reflect about the major lessons associated with the case and come to some sort of closure about the topic itself. Each of our first year classes is divided into 5 sections of approximately 60 students, and each section develops its own traditions. One of the traditions of this particular section is to begin the day with an enthusiastic beating on the desks to get themselves fired up for the day's classes. And it seems to serve to wake them up quite a bit and to increase the enthusiasm and readiness for the class that we're getting ready to start.
Whenever we're dealing with a case, before we jump into the numbers, we like to get a little bit of a context of, what the case is about, the company, the industry.
How many of you have been to a casino and done a little gambling? Oh my goodness, are we going to have some stories to tell?
Sometimes we like to have a bit of fun and we usually kind of talk about a particular industry for longer than we should, but that's kind of part of the fun of being in the case study method.
Anybody know what a marker is? The MGM case is about accounts receivable and bad debt expense. It is part of our core accounting course for our first year MBA students. This is sort of an opportunity to navigate the annual report in ways that we really haven't had before. And we'll start seeing more of those as we get into our discussions about inventory, discussions about property, plant, and equipment, etc. We'll be presenting you with some financial statement information, some notes to the financial statements, and then you'll be sitting back trying to figure out how to navigate through some of these numbers and figure out what's going on. Martha, can you help us track through some of these numbers? Generally, each day when we begin class, I will start the class by calling on a student in the classroom and ask that student to begin the discussion for the day.
I've always made sure that I'm prepared to at least be cold call in class. Not everyone always has the right answer, but it's a very comfortable environment.
The cold call is a way for students to continue to stay engaged throughout the class discussion. The students see it both as a motivation to prepare, but they also see it as an opportunity to shine.
Shouldn't it be a negative 3,448?
So what do you want me to do with this?
You just had to put a negative in front of the,
Or you want me to put it back over here?
No, keep it to the left. But you should also have the net write-off underneath that, correct?
Yes. Carolyn? Yeah. Okay, so what would that be?
That's 14,706.
Okay, so we've got write-offs. Just about any type of student interaction properly facilitated in the classroom will help solidify their understanding a lot more than if they're just sitting there listening to one person in front of the classroom tell them things.
It's entirely different when a professor lectures to you, because you're pretty much filling in bubbles for the most part, as opposed to actively taking a look at what is before you and being able to tell a story. Until I got here, I couldn't really tell you the story of a company by just looking at its balance sheet or the statement of cash flows, but I can tell you now where a company stands relative to its industry or its peers by just looking at its cash flows and what it owns.
Jennifer, can you articulate for us what this 85,504 balance means, without going and looking up what we decided yesterday? What does 85,504 tell us? What in words? The blend of students in the classroom makes for what I consider a magical learning experience. Those students that don't have an accounting background force all of us in the classroom to think intuitively and conceptually about accounting, rather than thinking about it as a rudimentary debit and credit. Those students that have a very in-depth accounting background see the classroom as an opportunity to take their technical skills and learn how to convey the information that they have inside to the layperson or to the people that they're going to be in a meeting with when they leave Darden and enter the workplace. Help us.
So they were doing what's euphemistically called managing earnings,
Okay.
right? They want to show fairly consistent revenue growth. Not revenue growth, but they want to show net income that's fairly consistent. And therefore they may be adjusting the provision in order to do that.
So what did you call that yesterday?
I call it the cushion or the wiggle room.
The cushion or the wiggle room, right? So is this why Ben might get suspicious as an auditor when he sees a left-hand side? Is this why we would hope Ben would get suspicious as an auditor if we see a left-hand side to the allowance account, right? Because this is what Ben's going to be. Well, we're not going to look to Ben, are we?
I think you should.
You think we should?
I'm going to go in and test all of their assumptions. And make
Ben is a good example of someone who brings a particular type of expertise to the classroom. He was a public accounting auditor prior to entering Darden, and so he has served as one of the checks and balances on the financial statements, if you will. As a result, he is a student that we can go to test some of our assumptions when we as managers in the classroom are trying to engage in the decision-making process.
And so MGM, it's the second largest hotel in the world. They have the largest casino in Vegas in terms of square footage, and in size they're only second to the Venetian. And they're really diversifying into the full entertainment business as opposed to casino business. So with increasing incomes and people kind of coming out of that, the bubble of '01, I think the amount of money that's coming into the casino into the hotel for non-casino related activities is increasing relative to casino gambling, and so they're I think they're being more prudent in who they extend markers to.
At Darden, we're not trying to train our students to be accountants. What we're trying to do is train them to be managers and to be intelligent users of financial information. Students in the classroom can simulate holding a management responsibility, using accounting information to make decisions and using it intelligently to make decisions, and then understanding the impact of their decisions on the financial statements.
You have this case which tells your story, but it's infused by the stories of your classmates. We would talk about relationship building, and I would bring up my experience as a lobbyist. We have classmates talking about a company trying to forge their accounts and how they found that out. Sometimes business or learning is very abstract, but here it's very real, and for that reason you tend to remember it more than not.
I mean, you round a number here, you round a number there, and all of a sudden it's significant.
Is accounting more of an art or more of a science? Definitely more of an art.
In some cases, there is a science to accounting. This is how the balance sheet needs to look. There are certain elements of accounting that are a little bit more of an art form in respect that there are different ways, all of which are certainly legitimate in accounting, but there are many different ways in which you can approach a particular, let's say, costing situation. As a general manager, you're going to make certain decisions based on allocating your costs in a more accurate way, and there are better ways to do it and not better ways to do it. And that's where the art form kind of comes in.
Last question. You're You're an analyst on Wall Street. You have a 5-minute opportunity to talk to the management of MGM, and you're puzzled about this issue, and you'd really like to get your hands around it and resolve the issue of why it looks like collectability is getting better. We've got 5 questions we can ask them. They have 5 minutes to respond. What are the top 5 questions we want to ask? There are some things that we can conclude, and there are still some things that we would like to know, but we don't have sufficient information.
Yeah, are there any specific measures they are taking in order to decrease the accounts outstanding from greater than 180 days, and are there any specific costs associated with those measures? Because we have to take those costs into account.
Does anybody have a question that's so important that they want to argue to take one of these off the list to get that question on the list? I was trying to force the students to think thoroughly about the question they wanted to ask, why they wanted to ask it, and make sure that it was of a very high priority. It was such a high priority that it was one of the top 5 questions that they wanted an answer to. Okay, I'm conscious of the time, so I think we're going to bring it to a close. A couple of things I want to say is that there's a lot that we can learn, and there's certainly a story that we can tell from looking at the financial statements and from looking at the footnotes that accompany the financial statements for any of these balance sheet and income statement accounts. Our task as users of the financial statements is to figure out what story these things tell. And then after we've mapped out a story, what questions remain outstanding that we'd like to get answers to and find avenues to get those answers. Having said all that, we can't figure out anything about what the story is unless we can understand, unless we can work through what the numbers are, right? There's a lot of pieces in this puzzle. We need to be able to put them together pretty effectively and pretty efficiently so that we can infer the story from that and then generate the follow-on list of questions that we'd like to ask if we have a chance to talk to management. It's 9:30, it's Friday. Counting's over. Have a good weekend.